If you owe the IRS under $50,000 and you would like to set up a payment plan, you can do it online. No phone calls, no being on hold for hours, no talking to IRS agent. And in this video, I will walk you through step by step how to set up a payment plan online at irs.gov. One important note, this video will be applicable only to individual tax balances. If you owe the business and business entity and business owes the tax, you will have to call to the IRS directly. Online option is not available for you yet. IRS working on it, but not yet. Thus, this video is for individuals. I am Olena Ruth. I'm tax attorney and founder of Ruth Tax Law, and I help the taxpayers to resolve their tax matters. Let's now talk about our steps how to set up a payment plan for the balances under $50,000. Step 1. Set up or log in into the individual online account. You have to go to irs.gov and then log in into individual online account and go to the portal. If you do not have an individual online account, you should set one up because otherwise you will not be able to set up a payment plan online. In fact, I recommend every taxpayer to set up an individual online account at irs.gov because this is an incredible source for different information. On their account, you can track your payments, make your payments, follow their refund, ensure that you have all the tax returns filed, and also you can obtain the IRS records. And of course, you can set up a payment plan. Step 2, verify your filing compliance before you go anywhere else. This is one of the steps that most taxpayers miss because the IRS will not approve your payment plan application if one of the tax returns that should have been filed is not filed. Inside your account, go to the drop-down menu labeled Records and Status and pull your tax compliance report. This report shows the IRS records of your filed returns going back at least 5 years. Read it carefully, and if the report shows that some of the tax returns or at least one return is not filed, then you have to file them immediately. Now, here's going to be 2 ways to resolve the problem. First, if you genuinely believe that you filed the tax returns, but the tax returns are not on the IRS record, then you have to call the IRS to figure out what was the issue and make sure that you have ready the documentation providing proof that you actually filed the tax return. And hopefully, if you filed the return, you do have a e-filing confirmation or certified mail. Other option, if you did not file the tax returns, then you need to file them either with help of your accountant or just mail them to the IRS. Definitely, you should know that the IRS will not approve your payment plan application if you are not compliant with the filing requirements. Step 3. Confirm that your balance is under $50,000. The total balance includes tax itself, penalties, and interest. Therefore, your total balance actually increases with every day. Moreover, IRS set up a payment plan for all the balances that you owe. They do not set up a separate payment plan for different balances. Step 4, choose the long-term payment plan and the payment option. When the portal asks what type of plan you want, select the long-term payment plan, the monthly installment option. Not the short-term payment plan, which is the plan under 180 days. And in my different video, I discussed why I do not recommend this type of the plan, and I will put the link to the description below. Next, what is the payment option? You have 2 options. And depending on that option, you will have different setup fees and the way how you initiate the payment. Direct debit installment agreement. This is an installment agreement under terms of which the IRS will automatically withdraw the funds or monthly installment payments from the designated bank account. You will be the one who designate the bank account from which the payments will be withdrawn. The IRS will withdraw the payments on the due date that you set up also for the payment. The IRS recommends that this installment agreement because they believe that it reduces the risk of you missing the payment plan. However, on the other hand, it's a little bit harder to change the due date, and you need to ensure that the bank that the bank has all the necessary funds on the due date. Under other option, the payment is initiated by you, not by IRS, and it depending whether you want the payment to be made from a bank account or credit card. Again, there are different additional fees can be involved. Step 5, select your payment term, confirm the amount that you will pay on a monthly basis, and also choose the due date for your payments. The portal will offer you several payment term options. Depending on your balance, this typically ranges from 12 months up to the IRS collection statute, which is usually 10 years. For each option, the IRS calculates the monthly installment by taking the tax itself, adding their penalties and interest that continue to accrue as long as you have unpaid balance. Therefore, for each term option, you have different installment amounts. Again, depending on the balance that you owe and what term you choose. You need to ensure that you actually choose the amount not based on the term, but based on the installment that will be due. My recommendation is always choose the lowest amount you can because you always can make voluntary payments. But by having a low amount due, you actually set up your payment plan without any risk to default if for any reason at some point you are not able to pay the monthly payment. And remember, you always can make voluntary payments. The only thing I'll note that voluntary payments cannot be included into your installments. Thus, if you choose, for instance, installment of $2,000, you have to make $2,000 payment every month because computer system set up by IRS in such a way that it picks specific amount on specific due date. And if you add any amount to this, or you make a voluntary payment and you believe that voluntary payment will allow you not to make a monthly payment next month, this is a mistake. In other words, make an installment payment every month, choose an affordable amount, and if you always can make voluntary payment, and voluntary payment should be made separately. The next what you will choose on this page of the portal is a due date. The due date is chosen between the 1st and 28th. Sometimes taxpayers asking me why 28th. Well, remember February, we have a short month. It has usually 28 days, so IRS wants to ensure that all the payments are consistent throughout the months. One note, so the IRS may not withdraw your first payment on the due date that you set up. If that happens, you need to ensure that you actually make a payment manually. Step 6. If you have a direct debit installment agreement, you need to provide the bank account information for the IRS to have that information and withdraw the installment payments. I recommend to my clients to use a separate bank account just for purposes of the IRS. Then you can ensure that you have available funds in the bank account on the due date and you do not risk the default of the payment plan. Step 7, confirm that the payment plan is on your online account. After you submit the application for the payment plan with the IRS, you usually get the response immediately. And then when you go to the main page of your individual online account, you will see the confirmation that the payment plan is set up. You need to ensure that the payment plan amount is correct, the due date is correct. The IRS system changes all the time. It has errors all the time. Therefore, I recommend you to return to the online online account, individual account, in 48 72 hours and confirm once more that the payment plan is in place. So that's a complete process to set up a payment plan for the balances under $50,000. And as you can see, you can do it by yourself. Of course, there's a situation when you cannot afford the installments proposed by the payment plan tool at irs.gov, or your balance is above $50,000 and you are not able to make a payment to pay down the balance below $50,000. In that case, you would have to call the IRS to set up a payment plan or call the tax professional, including Ruth Tax Law. A tax professional will help you to verify all your filing compliance, your estimated tax compliance, what's the balances, what's potentially can be done with the penalties. Interest are not removable, but penalties can work it out, and look at different options, not only a payment plan, but potentially a settlement offer, or called offer in compromise, or even currently non-collectible status when you do not make the payments. In other words, the payment plan is not the only option that you have if you cannot afford making the payments provided by payment plan tool at the irs.gov. I'm Olena Ruth. I'm a tax attorney and I work with individuals and businesses on resolving their tax debt, helping out with the penalties, setting up a payment plan, offering compromises, and also employment taxes and different other matters. And we can help you to resolve it if you do not want to have a stress of dealing with the IRS. Please subscribe to my channel. I post every week the videos about how to do it yourself, or maybe spot the red flags when you actually need to contact IRS or tax professional. And I will see you later.